Good morning. Refinancing in 2026. Let's look at rate and term options, cash out, and HELOCs and compare them. So refinancing is back on the table in 26, but it looks very different than it did during the ultra low rate era. And today's borrowers are no longer refinancing just to chase lower rates. Instead, homeowners are using refinancing strategically to improve cash flow, restructure debt, unlock equity, or prepare for future investment opportunities. And understanding the differences between rate and term refinances, cash out refinances, and HELOCs is essential. Each option serves a different financial purpose, and choosing the wrong one can limit your flexibility or cost you significantly over time. So let's look at a rate and term refinance. Basically, you're optimizing a payment on your mortgage. And a rate and term refinance replaces your existing mortgage with a new loan that adjusts the interest rate, loan term, or both. And you're not pulling equity out. So really, this is best for borrowers who are really just looking to reduce their monthly payments or to shorten their loan term, for example, from a 30 to a 15 or a 30 to a 20. The amount of interest you save by doing that is pretty substantial. But also switching from an adjustable rate mortgage to a fixed rate mortgage, or removing mortgage insurance, for instance, if you had an FHA loan. So in 2026, rate and term refinances are most effective for borrowers who originated late in 23 or 24 and can now improve their rate, term, or loan structure without increasing their balance. And the key advantage is there's lowest pricing and strongest lender execution. But the limitation is you're not pulling excess or cash equity out. Now, as a cash out refinance, you have liquidity and leverage on your side. A cash out refinance is going to replace your mortgage and allows you to pull equity as cash at closing. And this strategy is increasingly popular as homeowners deploy capital for renovations or debt consolidation or investments or business expansion. And these are really best for borrowers, who are looking to fund renovations or construction loans or construction projects, but also to consolidate high interest debt or invest in real estate or a business. But you're going to build liquidity while keeping a long-term financing fixed rate on your mortgage is the concept. Now, in 2026, lenders remain disciplined, and cash-out refinances typically require a little stronger credit profile, conservative loan-to-value limits, and clear use of funds explanations. So that's something we'll have to write a letter about. But the key advantage is you get large fixed-rate capital at scale. The limitation there is if you're taking out cash, you may have a higher rate than a rate and term, but it also resets the amortization loan clock. So let's look at HELOCs, flexible short-term capital. And a home equity line of credit, or HELOC, provides revolving access to equity without replacing your existing first mortgage. And this option is increasingly attractive for homeowners with low existing rates who don't want to refinance their primary loan. And it's best for borrowers who want to preserve a low first mortgage rate without redoing that. But access capital gradually is the other concept. And you can use funds short-term or opportunistically. So there's a lot of flexibility. And many HELOCs in 2026 offer interest-only draw periods but carry variable rates tied to prime. This makes them powerful but not permanent financing tools. So the key advantage is flexibility without having to refinance your first. But the limitation is you have variable rates and payment risk. So which refinance strategy is going to win in 2026? Well, the answer is there's no universal best refinance, only the right strategy for you and your balance sheet. And the right decision depends on rate exposure, liquidity needs, your tax strategy, and your long-term plans. And this is where working with a mortgage broker matters because structuring the loan correctly is more important than simply quoting a rate. So here's the final takeaway on refinancing. Refinancing in 2026 is no longer a one-size-fits-all decision, and the borrowers winning today are those who are using refinancing as a strategic financial tool and not a reaction to headlines. Now, if you are considering a refinance, whether it's a rate and term, a cash out, or a HELOC, the structure matters just as much as the rate does. That, my friends, is it for the day. Please visit my website, billrapponline.com. Love to chat with you further about whatever scenario. Have a good day.